Tristan Thomas here again with List Academy. Now, how often does this happen to you? You sit down with your client, you've already went over the different types of life insurance, they love the permanent policy, you've taken the time to consult them on the amount of life insurance they need, they understand that they need X amount of dollars worth of coverage, but when it comes to the premium that they need to pay on an annual basis, they tell you that they can't afford it. Unfortunately, this happens all too often. So what we've thought of is a simplified sales method that we've used many times before to help uncover assets that the client never knew even existed. This is a discovery process that will help enable your client to pay for that premium on an annual basis, whatever the dollar amount may be. And this is what we call the money pyramid. Now for the client, it's a complete snapshot of their current financial situation, which is helping provide convenience into where all of their money is at a particular time. It's addressing any goals and deficiencies that they may have, any breaks in the chain, so to speak. They can discover an optimal financial situation as well too, because what you're doing is you're helping them become more tax efficient by reallocating funds. Now, for you as the agent or the advisor, you're finding the money. What you want to do is you want to find the money, especially if you've gotten this far. If you've already talked to them about why life insurance is beneficial, you've talked to them about the total amount of coverage that they need, the last thing you want to do, and most important, is you want to be able to find money. So what the client can do is reallocate funds to purchase the policy. Higher premium cases as well too, especially if you have a $500,000 whole life policy and you can reallocate funds where none of the money is coming out of the client's wallet, it's just reallocating the funds, they're more likely to purchase that policy. Also, it's providing a pivoting opportunity for your next meeting. Now, because you'll have this financial snapshot, you'll be able to go deep into their current financial situation and find out exactly where you can assist. Maybe it's a bank account that they have that you want to transfer over to you, a brokerage account that you should have transferred over to you. All of this is down on one financial snapshot picture. So it's addressing any deficiencies for the client in a follow-up meeting, and it's a clear understanding of the client's financial picture. Sometimes we think that our client has a lot less money than they actually do. But the last thing we want to do is start to think with our wallets. We always want to shop with their wallets. So let's jump into that simplified sales method, the money pyramid. So what we want to do is we want to draw this out. It should never be pre-populated. The reason why we want to draw this out is it gives a little bit more connection with our clientele. So we want to draw a pyramid as we have here, and we want to break it up into 3 different sections: taxed money, tax-free money, and free money. Now what I'm going to say now is exactly the way that I would present this to the client. Now, Mr. and Mrs. Client, what we're doing is we're breaking your money up into 3 different categories: taxed money, tax-free money, and free money. This is where all your money is. But the first rule that I want you to understand is that our categories will be based on when we are ready to touch the money for personal use and not when it is being invested. I can't stress that enough. It's when you're ready to touch the money for personal use, to buy groceries, whatever it may be. Not when you're putting the money in and being invested, such as a Roth IRA, which is after-tax money that is pulled out tax-free. So again, when you're ready to touch it for personal use. So let's talk about the 3 different categories, but first let's talk about where a bulk of our money is, which is the taxed money section. Now in the taxed money section, give me some examples, Mr. and Mrs. Client. And the answer is that they'll say, well, my paycheck is taxed, right? So absolutely, Mr. and Mrs. Client, your paycheck is taxed. So let's break it up into 2 different sections. How much do you make on an annual basis, and how much do you make on it per period? And the reason why we want to break it up into those 2 different sections, Mr. and Mrs. Client, is because I want to know how much you make on an annual basis, which is usually before tax. But when it comes to per period, the number that you usually will give me is an after-tax number, and I want to know both. So we ask them that. Then I say, okay, well, give me some other examples of taxed money. They'll say bank account. So I'll take some time and I'll talk about a checking account, a savings account. Maybe it's brokerage accounts as well too that they're going to add into it, which consist of mutual funds, stocks, bonds, CDs. I want to find all this information from the client, but not only do I want to know exactly how much money is in it, but I also want to know where it's being held. And the reason why I want to know exactly where it's being held is because I want the opportunity to compete for that business later on down the road. So if I know that their bank account is, their checking account is with Bank of America, but they're paying 0.01%, but maybe I'm offering a 0.05% rate, maybe I can compete for that checking account, or maybe it's a savings account. I want to be able to compete down the road. So there's opportunities that lie here. Then I ask them, well, let's talk about your retirement accounts. That's being taxed when you're ready to touch the money, right? They'll answer yes. So I say, okay, well, do you have a 401k? Well, if you do have a 401k, let's break it up into two sections, Mr. and Mrs. Client. How much are you being matched? And what is the non-match number as well too? Now, I want to focus on this for a second because this is vital to reallocating funds down the road. I want to ask them how much they're making, how much they're investing, and the matched and the non-matched section. So let's just say that that client says, I'm putting 10% of my overall income into my 401k, but I'm only being matched 3. Well, I'm going to write 3% there and 7% there, okay, on the non-match. And the reason why, and we'll get to that in a second, that's why we do that. Other retirement accounts, maybe they have a SEP IRA, a simple IRA, things along those lines. Maybe it's a deferred comp that they're investing in as of right now. But again, these are all taxed money when they're ready to use it for personal use. So maybe they have a traditional IRA. Hopefully they have a traditional IRA. Maybe they have a real estate income with properties that they have. All this information that we want to be able to have later, so we can talk about it later on down the road. Also other things as well too. There's certain things that you and I may not have picked up on, but your client will bring it up in conversation because it matters to them personally. One of the things such as deferred comp was not something that I usually talked about until I was sitting down with a police officer and he talked about his deferred comp. If he didn't mention that, if I didn't ask him what other things matter to you, he would never have mentioned deferred comp and we would have lost out on a $500,000 opportunity. So always ask them, is there anything else that's being taxed when you're ready to touch that money? You'll be surprised what you find. So after we do the tax money, the next section is we want to focus on the tax-free money. So Mr. and Mrs. Client, give me some examples of tax-free money. Where is that tax-free money, right? So the first thing that they'll bring up is a Roth IRA. Now remember, that's money that's being taxed at the beginning. So before you invest it, it's growing tax deferred, but it's withdrawn tax-free, which is why we're putting it into the tax-free section. Also, a life insurance policy. You're going to probably have to tell them a life insurance policy is in this category because they truly don't understand how it's a tax-free benefit. So always add that in there. So the next section is the free money category. And the free money category is at the very top because, well, very little of our money is actually free money. But when it comes to that, the two sections are inheritance, which we wish we had more of, as well as a 401k match, isn't it? 401k match, since it's employer money being put into it, it's still free money. So we already know that our client is putting 3% of that money is matched. So we want to take that 3% and we want to put it over into the 401k match to show the 3%. So as of right now, this is the complete financial snapshot of where all your clients' money is. It's the taxed money and all their accounts there, tax-free money, all the accounts there, as well as on the free money and the 401k match. So now we have to find the different opportunities that fall within this financial snapshot. Well, one thing that really jumps out to us right off the bat is the fact that your client is putting 10% of their overall income into a 401k and 7% of the 10% is not being matched, right? Well, what if the question that I ask clients is, well, Mr. and Mrs. Client, why are you overfunding your 401k by 7%? Using the word overfunding lets your client understand that they're doing something wrong. And the answer to that question that you'll get is, well, what do you mean I'm overfunding my 401k by 7%? So I tell the client, well, Mr. and Mrs. Client, what if we were to take that 7% that's non-matched from the taxed money section and bump it up to the next level of tax-free money and put the 7% there? Would that benefit you? Going from tax money to tax-free money? Answer always is absolutely. Well, how do we do that? We'll say, well, what if we were to take that 7% and bring it up into a Roth IRA or a life insurance policy? So we can pay for the Roth or we could pay for the life insurance policy, which if this is the third part of your sales process, that's what you're going to be focusing on, the life insurance permanent policy. So what's happening here is we're finding out exactly where money is to reallocate it so the client then can use money that they're already investing, or putting into their 401k, reallocate it to put into a life insurance policy. Obviously that 7% here is taxed money. So what's going to happen is they're deferring the taxes, so they need to pay the taxes up front to bring it up into the tax-free money category. And this is Tristan Thomas with Liss Academy, your life insurance experts.